This podcast has been made possible by Workday.
Hi, this is Elaine Sun, COO and CFO of Mammoth Biosciences, and you are listening to the CFO Thought Leader Podcast.
This is episode 857.
And the biggest challenge for us a year from now is making sure we can reach as many customers as we can. And from a finance perspective, that's how do we stand up sales and marketing offices in new geographies to reach more customers? How do we continue to be the best in class with all our new products as we have been with our core products? And then how do we enable the company to continue to go fast? We've gotten a lot bigger. Went from sub 200 employees to nearly 600 in the blink of an eye. And so how do we continue to provide the right tools and trainings for every person to do their best work?
Hi, it's Jack. On today's show, we speak with Razzak, Jallow, CFO of Floqast. Back in 2009, as businesses navigated the repercussions of Wall Street's collapse, Razzak Jallow found himself standing at a departure gate with a boarding pass that simply read SaaS. To be clear, Jallow had just nabbed a spot on the finance team for Adobe Inc.'s Creative Suite, and the journey he and his colleagues were about to begin was the software company's migration from a perpetual box software model to a subscription SaaS software model. CFO Razzak Jallow shares that story and much more on today's episode. We begin after this. In a world that's always changing, one thing never does. Your need to adapt, your need to evolve, your need to grow. That's why we built Workday, a single finance, HR, and planning system that can change as your needs change and evolve as the world evolves. To learn how Workday is helping mid-size organizations embrace the future with confidence, visit us at workday.com. Hello, we're speaking with Razzak Jallow, CFO of Floqast. Razzak, welcome.
Hey, thanks for having me here, Jack.
So, Razzak, we always begin by asking our guests to look back for us, and we want them to share with us some of those experiences they feel prepared them for this role, the CFO role. What would come to mind for you?
Sure. I think one that springs to mind quite a bit for me was my time at Adobe. I was in corporate finance, moving over to the business unit finance, and it was 2009 was a tough time for a lot of companies, and I remember the entire company was willing to take a big risk. They were looking at their current business model, their current perpetual box software model through resellers, not a lot of direct contact with every customer, not a more modern business model where value and new features can be delivered all the time to their best customers. And they went and took that risk to go and switch from a perpetual box software company to a subscription SaaS company. And how the entire management team, but especially the CFO at the time, Mark Garrett, said, this is the right thing to do for customers. It'll be the right thing to do for our business model. Our current investors might not like it. They trade us on quarterly revenue and EBITDA, but I'm going to go find investors that understand ARR and the value of the subscription business, and we're going to make this change. And that stuck with me throughout my whole career on CFOs, being able to see what was best for the customer and the company and go ahead and do it.
Very cool. I just want to point out, you made an investment of years there, 5 years during that critical period and head down that path. So it really an interesting place and time to be. What happens next? What are you thinking as you move on?
So Adobe was really interesting for me and made me realize this is the career I wanted. I wanted to be in tech. I wanted to be in finance. it forced me to always think customer first and think about how we're delivering value to customers and think of each customer's value received and their buying habits and how can we make that as meaningful as possible to every single one. And so I got a lot of great experience in corporate finance as well as business unit finance and strategy at Adobe. I wanted to get more experience in new functions, so I decided not only to shift companies and shift what I would call industries. They're both tech, but going from software to hardware at Apple is a very different experience with all the supply chain logistics and the value to more consumers than business customers, and also switch over to sales finance. And so all those things really create a new learning experience for me, going to one of the premier companies in the world and in the Valley. And they were at a really interesting time too. Their supply chain had finally caught up to demand, and so they were going through real change in terms of sales finance, changing from being more of an allocation engine, like, hey, where's the product out of stock? Let's put it there, to really trying to partner with the vendors to drive more value. How do we make sure the vendors want to sell Apple more than anything else they have?
When you say sales finance, are you sort of the finance, the embedded finance person with the sales side of the house, or how would you characterize it?
Yeah, absolutely. So sales leadership in many companies, but let's talk about Apple specifically, is always looking to do the what's right and best for their customers. And through that, most of Apple's hardware sales go through reseller channels. When you think of Verizon or Best Buy or Walmart or even regional distributors and Mac specific ones. And so sales finance has to find the best way to deliver that with the right terms to those vendors and to really build that partnership with them so they continue to sell Apple. And I think when you think about what that really means, it's much more than just the terms and the margin and the economics of a relationship. It's also the partnership and who's delivering the best Apple experience to customers and who's really driving the entire Apple ecosystem forward.
So you're helping the sales folks really understand the dynamics there, helping them get a better read on which relationships are they deem to be successful for the company overall.
Yeah, and trying to decipher in a huge data set with so many moving factors in an industry. So, for example, let's say Best Buy runs $100 off iPad promo. What does that mean for Target's iPad sales? What does that mean for Verizon? Is that actually incremental demand to Apple overall, or are we just shifting around a customer that was already going to buy a week ahead? And so helping figure out all those complicated analytics on what's going on in the entire market for Apple hardware versus what's kind of noise, and helping everyone sift through that and make the best decisions.
Were you independent of the greater finance organization in that role? Were you sort of, reported up through sales, or was there a dotted line over to the main finance organization, or how was it done?
Yeah, it's interesting. So we would sit day to day and work mostly with sales. That was the building we sat with, those are the people we sat with and helped them make their decisions every single day. We reported up through finance. So at the end of each week, we would sync up with the broader sales finance team worldwide to share our learnings, understand some of their guidance, and come up with our plan going forward. And actually, sales was the one who funded our finance department. So we actually were in a sales expense because they saw so much value in having a finance business partner that could help them do better.
Interesting. Any thoughts on that? Just these two interesting companies you were a part of up to that time, Apple and Adobe. Just culturally, being a finance executive in Adobe versus Apple, cultural differences. Anything you can share with us as you built your career, looking back now, what you realize?
Yeah, I loved my time at both. I thought they were both unique places where you could do your best work, but also in different ways. Adobe very much has seen great growth on its own and had much more of uh, a family culture, and that a lot of people had been in similar roles for a long time and really understood the customer and the industry. Apple was different in that it had grown so much over the past decade and had so many brand new product lines than they had before, and so it was a much more intense environment. I would compare it, the difference between, say, it was a little closer to, say, like an investment banking environment than, say, the Adobe, which is a little bit more corporate finance environment.
Do you think of yourself as just a FP&A executive at this point, or how would you characterize yourself to your peers if you went back in time? What was it? And again, you were ahead of eventually you're ahead of sales finance for Apple. Is that right?
So I had the demand planning for sales finance for North and South America through the resellers. So it's a big company. There's a lot of different pieces in there. Um, in terms of, do I see myself as an FP&A? Certainly, I had my roots in FP&A, and I think if you ask me the things, the analytics, every once in a while I'll jump in the details and geek out over. It's a little more FP&A than other areas. But I think I really changed my thought process on it back at Adobe, where I had to really be a customer and business partner first finance person. So it's always about what's doing best for the company and the customer. And FP&A is one way to do it, but there's tons of different areas that we can deliver on that across accounting and operations. And so I think what we're seeing now, a lot more. A lot more business models are a lot harder to interpret upfront. They're not quite as simple as a transactional, I sell a product for this many dollars and I immediately make money. And you're seeing accounting continue to have a bigger and bigger operational impact there.
Well, you have a couple of more stops along the way before you enter the CFO office at Floqast, but these are interesting chapters as well, but I'll leave it to you to share what you'd like from them. Some of the companies we all know well. I'll let you share some of the details. Can you continue for us?
Yeah, so I originally had corporate finance and BU strategy finance at Adobe. I then went and got the sales finance experience, which is really important, and go to market is a huge expectation of CFOs everywhere. And then I went to Lending Club to get more of the technology and product planning finance role, where I spent time there. And I felt like that allowed me to cover every area of FP&A and be well positioned to come into a company where I ended up at Looker in B2B SaaS, smaller company than obviously Apple and Adobe, but where I could run all of FP&A as their VP of FP&A. And so I was able to combine all those experiences. Each person on the team, I had done the job before in some capacity, and so I could help them along their career paths as well. And that was really exciting for me. I came in working for the CFO of Looker, Joe Moran, who was awesome. And as we started, eventually we were doing so well. We were planning the IPO, and Google came along and acquired us. And when it became obvious Google was going to acquire us, Joe went on to do CFO elsewhere, and I took over all of finance for Looker through the integration and how we looked after the integration. So, and Google was yet another fantastic company with a very different culture than both Adobe and Apple, and so very much rooted in its search database roots in terms of culture. So, you think about it, a constantly live service like Google search. If you make any changes that breaks anything, you're breaking it for billions of people across the world. And so it's a much more deliberate pace of change to make sure that you're not breaking something on such a large company that could impact everybody. And so seeing those three different very successful cultures was really interesting throughout my career.
Well, again, just a collection of companies that we don't always see side by side or in a sequence like you have them. So interesting times to have built a career through each of those companies, taking steps forward. We might have a few more career-related questions for you, but just so I think our listeners realize, you're right there after Looker and your tour of duty at Google. You step into a CFO role shortly thereafter at Floqast. So let's find out about Floqast. Tell us about this company. What does it do, and what are its offerings today?
Absolutely. I was so excited to find Floqast. I couldn't believe it was real in some ways. It is, your standard B2B SaaS software. They focus on working on an accounting operations platform. What that means is we generally sell to the close. So every single company in the world that has an accounting team goes through some kind of monthly or quarterly close. It's often a very hectic and chaotic process. A lot of times people are coordinating just by stand-up meetings, by emails, by Slacks. They might have some Excel checklists on what they're doing. And as we saw, not only was that not a very good solution before, but especially once more teams went remote, that ad hoc stand-up communication style got less and less scalable. And so, like, I personally believe the finance tech stack is far behind the go-to-market tech stack. If you look at, go-to-market teams, they've got many solutions to help them across workflows and automations to make them as efficient as possible. And the G&A and finance tech stacks are still catching up. And so I think Floqast is one of those unique solutions that comes in, works with existing processes, works with your file servers or your Excel. It's not a one-year implementation. It's a very quick implementation and allows people to get back to what they really want to be doing. The more intellectual value add activities, the more operational and strategic activities, rather than the activities of manually trying to figure out what's going on in the close and what everyone's status is.
From the outside, my guess would be that you are you the first CFO at Floqast? It looks like you're the one who's going to open this next chapter of growth.
Yes, first CFO there, came in about a year ago.
Can you just maybe give us an abbreviated history of the company's capital structure?
Sure. I think, if you go back really far in time to when the company was first starting out, a lot of people weren't open to the idea of workflow and automation software for the accounting close process. The accounting close process isn't well known to a lot of people outside of accounting. And so originally, the founders started an accelerator and then got their seed round and then their Series A, and recently last year closed a Series D with a lot of premier investment companies. And so you're starting to see, especially in the last few months, the office of the CFO get a ton of investment. People realize how much value there can be added in the office of the CFO, as well as the office is constantly getting asked to do more and more things. So when you think about all today's business models, I mentioned this a little bit earlier, they're a lot more complicated, especially in something like B2B SaaS. They're very capital intensive. And you don't think about software as being capital intensive. You think of the factories and the labs and the foundries that require a big upfront initial capital investment. But actually, the R&D is very expensive to develop the software. And then on top of that, you've got your customer acquisition, which often costs more than a year's worth of revenues or profits from the customer. And so when the path to profitability is so far out, you really have to lean on your finance teams to figure out, hey, are the decisions I'm making the right ones? Because I'm not really going to see the benefit for a year or 2 years out. And so part of that, us raising capital and getting great partners on board has allowed us to really invest in product, really build what we believe is the best-in-class product. And we see it in a lot of our internal metrics that we're really delivering a lot of value to our customers.
So as you mentioned, you've been there, arrived in 2021, so roughly a year, a little more than a year, perhaps. Looking back, can you share some thoughts on your first 100 days?
Yeah, absolutely. So I came in, as I said, I was very happy to find this opportunity because it was really a great team in place. And so we had a lot of really great people. But there were some areas that I was brought in really to help the company scale. And when you think about scale, that's not just building the processes needed to transact more things or in more countries and more geographies, but also to help the business make the right decisions to continue to scale at that speed. And so there was a few things we did right away. One was, for me, it was really build up the business support teams, both in my org and in others. So first, it was establishing separate dedicated FP&A teams, one for go-to-market and one for corporate and G&A. And the reasoning behind that is all the things we discussed earlier on how important it is to understand the economics of your business and to really enable sales and marketing leadership to have all the insights, not just on how they're how fast they're growing, but which activities are driving the most value and which ones have the highest ROI. Where should we go faster and where should we slow down? And a dedicated team that's with them every day, feeling their problems every day, is the one best likely to partner with them and breed success there. And so we had those two teams. The other thing was again on going faster and scaling. So identifying organizations outside of finance, for example, our revenue ops team that we absolutely needed to help this sales org that was growing really quickly, help them scale and be able to not only handle the volume of leads coming in, but plan for the future, both operational and process wise, but also system wise. And so those were two of the really big changes we made. Once you're at that, you raise a large round of funding and you realize you got to put that money to work. You need teams that can work with business partners to find the best way to put that money to work. No one ever knows that answer in a silo. You know, the finance team all by themselves won't know that answer. The sales or marketing or product team all by themselves won't know that answer. You really need cross-functional collaboration and analysis to figure it out.
We like talking to finance leaders about these types of relationships, such as sales ops. How do you manage that relationship? I mean, does that sit between you and sales, or does it sit in sales?
It sits in sales. I think that's the right way to have it. It could sit in finance, but I think it's better placed in sales because most of their interaction is with the AEs on a day-to-day basis. Um, Luckily, it was a easy relationship to build because our head of RevOps was also our head of sales ops at Looker. So there was a already established relationship there soon after I joined, and she's been fantastic. We do have weekly syncs, but it's more small teams. It's not the entire RevOps. And I think the big ones where we come together is on our quarterly QBRs to get together and see what we're seeing. And those are really powerful for a company in that everyone has a set check-in point where everybody gets together, discusses what they're seeing, and you can make quick actions because the advantage of QBRs is all the meetings happen in the same 2 or 3 days. So you're all aligned on one conclusion at the same point of time, very much like your close, how you have to align on this is the set of numbers for last month and we all agree to it. We do that with business processes as well on QBRs. And so certainly I'd say probably would have more syncs with our RevOps team if there wasn't already a multi-year relationship and we kind of know what each other's thinking a little bit already. But that's very helpful for teams.
Is there, and we always like to, of course, ask for those top of mind metrics, and we realize this is a SaaS company, so it's all about business unit economics, and it's all about clearly renewable revenues and getting your lines of sight in there, understanding those customer relationships are maturing the way they should be. But back to those QVRs and how that information is shared. The way you described that was interesting to me, and you guys sort of have an intuition between each other. As those numbers get shared or as you enlighten everyone at the same time, you all get smart together. How am I doing? Close?
Absolutely, absolutely. And I hear one of the biggest things for me is universal data access so that everyone can get smart. And so naturally, coming from Looker, I was a big Looker fan. We rolled out our Looker and Snowflake BI dashboard, which is live data from multiple data sources, and that is a dashboard that anybody with a seat can view. So our entire C staff and our executive team looks at it daily. It's got most of our key metrics in it, and it's also drillable. So when it doesn't have to go through a data team. The more friction and roadblocks you add to someone getting the answer they need to make an insight, the less likely you are to get that insight in a timely manner. And people get frustrated. They just give up and go with their gut if you can't get them the data that they need. And so that daily dashboard helps us keep us all on the same page, at least on the high level metrics. And then we can even do a little bit of investigating on what we think might be driving it. But really the QBR is the time to come together and figure out what's the real why behind it and what are we going to do about it for the next quarter. It drives a lot of accountability as well. Someone comes in and presents to the exec team and says, this is what went wrong. This is how I'm going to fix it. And the next quarter, they're back up there again to give us a status update on what came out of the last meeting, as well as what's new and what we're going to do going forward. So I'm a big believer in, you got a whole bunch of smart people in the company. You hire smart people. You got to help them deliver great insights and great decisions. And you can't do that if you silo information, or you keep things too close to the vest, worrying someone might find something that's wrong. It's like, you want them to find what's wrong, because then they'll come up with a solution for it. You don't want things just languishing. And so when you're in a company that's scaling very fast, there is no way for one individual or even 4 or 5 individuals to keep up with everything that's going on in the company. You really have to give it to everyone to let them have ownership of the company.
I mean, having worked at Adobe, Apple, and Google, are there certain cultural aspects of any one of those companies that influenced your thinking and you're now trying to, make it part of your culture there? And as far as finance is concerned.
Yeah, I think maybe I didn't realize this until I'd been at least 2 or 3 of them, but all 3 of them are very much customer first. And I think if finance teams definitely need to keep that in mind, because if the customer's not happy, the company's not going to have great long-term prospects. And so for, each company is a little different. Now we're a B2B SaaS company. So for me, that metric really is gross retention. I know people love to look at some other metrics. Net retention is really important. All these other ones are important. But gross retention really speaks to, does the customer get enough value out of your product that they're not going to give it up? And so that's one that's really important to me, and we focus on a lot, because it speaks to really that, does the product make customers happy enough for them to keep using it and keep buying it? But zooming back out, it really is overall, how are we delivering value to customers, right? Whether that is Apple's kind of surprise and delight. I don't know what Google's one's right now. It used to be "Don't be evil," but I can't remember what their motto is now. Adobe as well. All 3 of them do a great job of focusing on the customer and making most of their decisions on what's the most efficient way to make that customer happy.
I would imagine that your talent mindset at Looker changed. It's a smaller company. Suddenly, when you lost a hire or weren't able to attract the person you wanted to, there was a real pain felt, more so perhaps than at some of these other big name companies. Likewise, Floqast is a fast growing, smaller company where every hire matters. Can you tell us something of your talent mindset?
Yeah, absolutely. So I truly believe that, all other things being equal, the company with the best talent wins. They're the ones who are going to make the decisions. They're going to be the ones who actually push the company forward. And even if maybe one company has a slightly worse product or slightly worse market position, if they're constantly making better decisions than the other companies, they're going to eventually win. And so to do that, you've got to attract and retain top talent. It's much easier when you have the brand of and the reach of Apple or Google to attract that top talent. So you've got to find the right fit for a different type of challenge, right? So the thing that I found really works is at the Lookers and the Floqasts to really sell them on how much experience someone's going to get. Someone who wants to not just do one thing and be best in the world at it, but someone who wants to learn many, many different things and isn't afraid to jump in and try and learn something that they've never done before. And those types of people tend to do really well at small, fast scaling companies. But then, that's how you can weed out the ones that might be a great fit. Then you've got to find a way to retain them. And this is something that I'm really passionate about, is that companies should absolutely overinvest in technology and automation for their teams. If you hire someone brilliant and then you ask them to spend 80% of their time doing manual work and not using their smart mind, they're going to be miserable. You're not getting much value out of them, and they're going to leave. There's no amount of money. Well, that might not be true, but throwing more and more money at someone while you're wasting their time isn't a good talent management strategy. And so, we believe in that, especially in the accounting space, where Talent is very scarce. There's less and less people choosing accounting and getting a CPA as a profession. There's more and more people leaving that profession. At the same time, there's more and more demand in the market for people with CPAs and accounting backgrounds. And so if you want to attract the very best accountants and you want to keep them around and you want them to be happy and drive value in your business, you owe it to yourself to invest in technology and tools that take away the manual, mundane work. And so a lot of companies make this mistake of saying, well, I don't have all the tools I need, so I need to hire someone, really smart and really expensive because it's a tough job. Investing in the tools, you're not going to be able to retain them because then they're going to come in and you're going to say, great, our close takes 30 days every month, so they're spending 100% of their time closing the books each month. They don't have any time to do all the great things that you hired them for.
Great, thank you for that. We're gonna jump to what we refer to as our finance strategic moment question, and this is where we just ask you for one moment of insight during the course of your career. You've had 3 of these maybe every day for the last 10 years, but it's we're just looking for one where your lines of sight allowed you to see an opportunity, a risk, uh, an indicator of something that was strategic for the company. And anything come to mind when we ask for a finance strategic moment?
Sure, I'll go back to the Adobe time. So I'd recently been moved over from corporate finance to the BU finance, and I was really good with Excel and modeling. That was my wheelhouse and my strengths. They said, hey, you know they trade our company based on quarterly results. Can you help us make our revenue more predictable? Modeling out where we think we're going to land in the Creative Suite business unit, which is Photoshop, Premiere, kind of all the big Adobe products you think of pre-Omniture. I said, sure. So took a pass. I was like, okay, I did it. I think it's maybe 1% or 2% more accurate, but that's not your problem. Well, what's my problem? I was like, your problem is you're selling less units every single quarter. It's harder and harder to get them to upgrade. And so this is not maintainable going forward. Like eventually you're just going to have a whole bunch of customers using the version of your software 7 years ago, and you've got to spend more and more on go-to-market to actually convince them to upgrade. And that kind of snowballed. Like, okay, what's right for the customer? And then we started looking at, okay, well, what do our customers want? Like, they want the ones who are using our products to actually do their day-to-day jobs. They don't want to wait 18 months for a new version to come out. But as soon as there's a feature that's needed, if Apple releases a new device form factor, they want the tools to develop for it today. They don't want to wait 18 months for the new version in the perpetual world. Okay, well, what about our R&D teams? Like, what's going on there? At the time, Master Collection had 27 products in it. So that means 27 R&D teams had to ship their products on the same exact day, which didn't make a lot of sense internally for efficiency. Even our marketing teams, Creative Suite spanned many buyers. You had digital video, you had Photoshop buyers, you had education, you had web developer, you had so many different types of customers that all bought at different times in the year. And so with the perpetual model, you shipped at the same time. Maybe you marketed at different times of the year, but you didn't have that synergy of shipping and marketing and selling all in one motion. And so when you step back and you say, okay, well, what fixes this? Well, subscription model fixes this pretty well and puts us in a better position for the future. And I won't repeat myself, but then, you start evaluating that at the company level because Creative Suite was most of the company's revenue. And you say, okay, well, no one understands this. None of our investors thought they were buying an ARR company. They thought they were buying a perpetual software company. And so how do we navigate our entire investor base? How do we navigate as a public company the markets to find the right investors who will value us on the metrics we're going to care about next year that didn't exist last year? And so that moment, understanding how finance can coordinate all the things across the company to really drive value with the right finance leadership and a CFO who doesn't just understand his own world, understands the products and the customers and how all the different teams work together was really impactful for me. And I think there are moments like that. They don't come around very often, but recognizing when they're there and figuring out how to get the entire company on board with a change in strategy was really wild to be part of and to witness and to see how far Adobe went while I was there and well after I left.
Hi, it's Jack. I hope you're enjoying our talk with CFO Razzak Jowl. As you just heard, Razzak gave a admiring shout out to former CFO Mark Garrett. Just a few notes on CFO Garrett. Mark Garrett served as CFO of Adobe from 2007 to 2018, so an 11-year tenure. And certainly a transformational period for Adobe. Prior to Adobe, Mark Garrett was CFO of EMC, where he spent 4.5 years. And before that, he had spent 23 years at IBM. We now enter the mentoring round with CFO Razzak Jowl. We're going to enter the mentoring round by asking you now to look back to your first 30 days at Floqast and see if you could go back in time and just give yourself a piece of advice for all of what was in store and unfolded this first year. But for other first-time finance leaders, what would you tell yourself that first 30 days? Something just to remind yourself about? Anything?
Let's see. I think I am lucky in that I've made quite a few switches in my career, so I'm a little bit used to change and used to landing in a new spot. I would give myself the same advice I always give myself and don't quite follow as much as I wished I had. Um, Listen to people, learn, but trust your gut and go fast when you know something needs to be done. So I think this isn't just for finance. I think this is for anyone coming into a leadership position. Once you know that you have to do something, don't delay. And so I think there's many areas where I took that to heart, and you could see immediate change in standing up new FP&A teams. And I would just say broadly, that's always good advice. If you once you've made up your mind on something, go for it.
When you did make job changes, were recruiters in the mix, or was it relationships? Or
Yeah, I found early in my career is very much recruiter helped a lot. I think my initial land through Adobe was more relationship, and Apple was more relationship. Lending Club was a recruiter because I knew what I wanted to do there. And I think at a certain point, once you find out what you really like doing, for me, it's Flowcast. It becomes a lot more relationship based because you've gotten to know other people in the industry. You've gotten to know, the different investors or the different executives, and it's much easier to find the job and much safer to find it through a relationship. There is a shared understanding of success when you've worked either with someone before or in the same network as someone before on what success looks like. And I think when you go through a recruiter, it can be a good way to break into an industry that you don't know anyone or you're not familiar with. But you also have to do a whole lot more diligence to figure out are you going to be a fit there, because there's a lot less shared data points and shared definitions of success.
so we always like to ask our guests to reflect a little bit on the personal side, where we're looking for maybe a habit that you have or part of a routine that you have that sort of sets you apart. You're kind of known for it. Is there anything that you do? Might be something a family member would share with us?
Let's see here. Let me think on the personal side. I think I love to diffuse things with humor. So I think my family would say I'm always making jokes, and if no one laughs at them, then I do. So I might be guilty of a few dad jokes. On the professional side, I really love to be respectful of everyone's time. And so one of the things that's really important to me is that you never have meetings that don't need to be meetings and can just be an email. Or if you do have a meeting and you need a decision, the deck goes out 24 hours ahead of time so people can read through it, and then you're just having a discussion in the meeting. And I think that's really important because it simply makes the day more fun. If you're going in and every meeting you're in is an active discussion where you're learning or you're sharing ideas, that's really interesting. If your meetings are 45 minutes of reading out a slide template and then 5 or 10 minutes of people quickly trying to figure out what the decision is, it's not as fun throughout your day. So I'm big on retaining talent, big on retaining or having fun, and I find that's really important on the work environment for me.
Would you have a book recommendation for us?
Yeah. Chris Voss has a book I read recently. I wouldn't say it's super relatable to business, but he's got a book called Never Split the Difference. Many of you might have heard of it before, but it's about his learnings as an FBI hostage negotiator, and it's about negotiating where you can't split the difference, right? You can't say, okay, give me half the hostage back. So there's going to be a resolution one way or the other, and how you do it. And while I don't think that's always applicable, because a lot of times in the finance world, when you're negotiating with someone you're going to work with for the next 5 years. So you can't use all of the hardball tactics that an FBI negotiator that will never see that person again would use. That said, it's a fun read. It's a really fun read, and it makes you think about just how to approach problems that seem insurmountable at the beginning. But if you take a methodical, well thought out approach, it's not impossible. In fact, it can be a very predictable success, which is what he found in his time with the FBI.
Very interesting. What was the author's name again, or the agent's name again?
I think it was Chris Voss.
Well, thank you for that. Excellent. We always like getting new selections. We haven't had that one before. So thank you for that. We are up to our final question, where we're going to ask you to look forward 12 months into the future here as CFO of Floqast. What are your priorities?
I would say the biggest thing for us is that we've got an absolutely fantastic core product with our closed product, and we've now got over a year under our belt with our second major solution in Floqast Ops. We recently announced our latest product in SOX compliance for controls. And so when I think about that, it's really providing a comprehensive solution across those three problems for our customers. And the biggest challenge for us a year from now is making sure we can reach as many customers as we can. And from a finance perspective, that's how do we stand up sales and marketing offices in new geographies to reach more customers? How do we continue to be the best in class with all our new products as we have been with our core products? And then how do we enable the company to continue to go fast? We've gotten a lot bigger over the last couple of years. Went from sub 200 employees to nearly 600 in the blink of an eye. And so how do we continue to provide the right tools and trainings for every person to do their best work? And that's a very different problem and solution at 200 employees than it is at 600 employees. And if I think a couple of years down the road, it'll be very different at 1,000 plus employees than it was at 600. So building up that solution framework and that path over the next 2 or 3 years to make sure the company can continue to succeed and we continue to scale, which is really what, at a growth startup, that's what you bring in a CFO for, to help the company continue to scale.
Razzak Jallow, thank you for joining us on CFO Thought Leader.
Thank you so much for having me. I had a great time.
Hello, listeners. Do us a favor. Be certain to subscribe to CFO Thought Leader on Apple Podcasts, or if you're an Android user, check us out on Spotify or Google Play. If you like the show, please recommend it to a friend.